the screen visible? Please, anyone of
No,
you give
sir.
me a con.
No, sir.
1 minute, 1 minute. It's visible, I think now.
Yes, sir.
Yeah. So good morning, everyone. Welcome you all to the next lecture of JCE Connect series of online lectures. So in today's class, we will be starting with the concepts of module 2. And in today's class, we'll be discussing an important concept, which is pricing. So pricing. What is pricing? Pricing is the value in money or its equivalent placed on any goods purchased or sold or service rendered to a customer or a client. It is usually expressed in the monetary terms like rupees, dollars, pounds, euros, etc. So now, in a civil engineering subject or say construction management, everything, this pricing becomes a very, very important subject to be understood and studied because we will deal with various forms of prices, which will include materials which we are purchasing, the wages, labor charges, etc. So we'll come across many things wherein this concept of prices will be involved. So what is the price? Price is the value in money to the goods purchased or sold or service rendered to a customer. So you as project manager will come in this service bracket wherein you will be a consultant and you will be giving the service to the customers or the clients. So if you are in the purchase department, you will be dealing with the purchase of goods. If you are in the sales and marketing department, you will be dealing with the sales of the products. So this pricing overall becomes a very, very important concept to be understood. So generally, we pay the price in terms of monetary terms like rupees in India, dollars if you are in US, Canada, Australia, pounds if you are in UK, euro is the currency of Europe. So there are various forms in which we pay the price. It may also be expressed in terms of non-monetary terms, such as free goods or service in exchange for purchase of a product. So sometimes we get some complimentary gifts for purchase, or we get some discounts on purchase if we are a regular customer to a shop. So these all things also are termed under the pricing thing only. So it is not that every time you will be paying in terms of money. Sometimes you may get the free installation. For example, if you order something on Swiggy, the delivery cost is not there. For your order placed, in that itself, you are covering the price for the delivery. Or some big goods, if you are ordering on Amazon, above a certain limit, the delivery charges they say free, but that is already adjusted in the pricing. So similarly in civil industry, if you have placed a big order for cement supplies, then transportation charges may be, given, you may get a discount on it. Okay, that again is a part of pricing. So sometimes pricing is done in this non-monetary forms also, which includes free goods or services or anything else. Now, the oldest form of pricing is barter system. This was the most ancient form where we did not have a proper economic system or monetary system. Bartering is a system which involves exchange of products or services for another product or service. Many times when we were in the olden era, not we were not there, our ancestors, they used this barter system. Exchange of fruits, vegetables, milk, or this day-to-day products was running on barter system at that time. Or some services were taken, and instead of paying money to them, say something in the form of other monetary benefits as gold or some food grains, etc., were given. That was the oldest form of the system, which is termed as the barter system. Now, there are different forms of prices. So, day-to-day life, we come across many ways in which we pay a price or we get a price. For example, say consultation charges. Now, consultation charges are generally associated with the professionals. You go to a doctor, generally you pay a consultation fee. You go to an architect, engineer, or a project manager, will be paying this consultation fees where you are taking their opinion into account. Then so there is something called as fees. Okay, now you all are paying fees to the college. That is the fees, which is a form of a price. Bills which you pay. Okay, we pay the electricity bill, we pay our telephone bills, etc. Again, it is something as a form of a price only. Buses or taxi fares. Okay, when we use Ola, Uber, or we travel by a bus, the fares which we pay is a form of price. Toll charges which we will have to pay when we are traveling on highways is a price. The rents which we are paying is a price. Interest paid or received is a form of price. Wages, salaries, commissions, bonuses. Okay, so these are all the different forms of prices which we come across in our day-to-day life. There are many, but a few I have listed. So price comes in many forms and goes back in many. Now for all this, there is a certain period. Now when we say a rent, okay, we'll have to pay it monthly. When we say salary, we'll have to pay it monthly. So when we say toll charges, we need not pay them monthly. If you're traveling regularly, you can have a monthly pass. Or once when you are traveling through that toll gate, you have to pay those. The commissions are such an unofficial pricings which we have to pay when our work is done or we got to get our work done. The bonuses, many companies will pay the bonus once in a year or twice a year dependingly. So these are all the different form of prices you as a project manager, you should be having a knowledge of, because maximum are those things in which your money is going. Now, how can we determine pricing? So there will be some steps involved in pricing, and there is a proper way in which you will determine the price of a product, or say in a civil engineering terms of a construction. There are 6 basic steps that are used to determine prices. And now this is an important question. Okay, explain the steps involved in pricing. This has been asked in examination, and it will be a question further when you give your second internals also. Explain the steps involved in pricing. What is pricing? Explain the steps involved in pricing. So there are 6 basic steps. First is establishing pricing objective. Second is determining the cost. Third is estimate the demand. Fourth is study the competition. Fifth is decide on pricing strategy. And sixth is set the prices. So now all these 6 steps will have a very important role in your sale of your product. Because see, at the end of the day, when we are into business, say any business, we will be getting money only when our product is sold. So one by one, if we have to discuss this, now especially when we were in the classrooms, these concepts, okay, we used to have a proper discussion so that understanding becomes more with discussion of these concepts. Now this is a one-way journey where I'm speaking. You may be listening or may not be listening, who all are there. Now, when I say what is establishing pricing objectives. So first objective of any company, imagine you are owning a company. What will be the first objective of the company? Any one of you? Who thinks who will own a company tomorrow? What will be the first objective? Is anyone who is active can tell me if you think that you can own a company? Vivek, I think you are in contracting already. Can you tell me the first objective? What will be the objective?
Yes, sir.
Yes. What
Sir,
will be the objective of price?
sir, in short, it will be like better quality and lesser the price.
Mhm. So he's selling in a good way, but basic objective will be profit. Right,
Yes, sir.
Vivek?
Yes, sir. That
Whatever
it
it
will be
is,
there.
yeah.
Hmm.
Whatever it is, once you come in a business or once you be an entrepreneur or whatever you start doing, first objective will be getting profit. Because without profits, you cannot do anything. Now that profit can be more or less, that is different, but you got to get the profit first. So once you start establishing the pricing objectives, yeah, Vivek, you can off your mic. Yeah, thank you. First, when you start establishing the pricing objectives, first is profit. Okay, so you should have a clear idea of the product, what you are going to introduce, and how you can gain the profit. Now, more profit, less profit depends on various other things, but the main objective of establishing the price will be profit gaining. So there will be various other objectives. Now, if we are talking about the vaccination process, now vaccines which are coming into the market, now you cannot directly go with an objective of getting profit when we think on social platforms or say humanity basis. But still, what is happening, everything is happening with respect to profit gaining only. So basically, your objective or first step is establishing pricing objectives. Means how should be your cost? What is your product? How is it serving the society? Now, from civil engineers' point of view, when we think, now if we say a road contracting, okay, profit making is a part for sure, but they're offering good service, as Vivek rightly told, giving a good quality because that road will be used by hundreds of people. Any mishap on the road can cause a big damage. So that also becomes a goal of pricing, but because of various other things that may be considered or may not be considered. Now, if you are developing a project, say a rural housing project, if you are developing, and you have to fill a tender or a quotation you have to give. So that time your objectives and your thinkings will be different. You're building a very high five bungalow, okay, or a very big apartment you're constructing. Then in that way, when you think, the objectives of pricing will be different. Okay, so that is how objectives will come up in the process of pricing. So you should be able to establish the objectives as the first step of pricing. Second, determining the costs. So this is an important process because whatever you are investing in raw materials, labors, everything, etc., that cost you should know very much properly. Because say once you fix your price and then you feel that the costs which you are putting is more, then you can't help it because already you have fixed the prices and you have already advertised. So determining the cost, again here your estimation subjects, okay, estimation and valuation subjects will be very, very important in determining the costs involved. Okay, there will be various costs involved in a project. Mark this, material costs are there, labor costs are there, various other things are there. So you should be able to determine the costs. Third, estimate the demand. Yes, your product might be great. Okay, your prices might be low, but if you fail to estimate the demand of the market, your project will be a failure. So you should be able to estimate the demand of the markets. Yesterday only I have read an article wherein in this quarter they have shown how the housing demands have fallen down. Only Hyderabad is the city which they have named in the metros where housing demand has picked up even in this pandemic season. Okay, so these all things will be affected by various different factors. So estimating the demand before setting the price is also very, very important. Now, sometimes if you are having an objective of profit orientation only, then if the demand is high, supplies are low, you can automatically increase the price. As the demands are decreasing, you can lower the price proportionally. Then fourth is studying competition. Yes, this competition study becomes a very, very important aspect, especially when you go in a bigger organization and you are applying for a tender. Okay, so how much should be the cost? How is your competition? Who are the other people who are bidding for the same project? What are their strategies, their previous strategies of the different projects which they have executed? What were your strategies because of which you may or you were not able to get a tender in the previous cases? So all this study has to be done. So there will be a tendering department, separate department in a big construction company, which will take care of many things in this. Okay, so studying the competition is a very, very important thing involved when or before you fix the prices. Then decide on a pricing strategy. So how will be your pricing strategy be? Will you go ahead with the fixed prices or with some changes? Are you able to accept the pricing strategy? These all things have to be fixed by you. Say for example, in a residential building, all the flats are sold, only last one or two flats are remaining. So in one sense, what will be the builder saying is, okay, I'll reduce the per square feet cost so that let those two flats get sold so that I'll make a bit of profit. Some builders say, no, I have fixed this price and till I get this same cost, I will not sell those price, so sell those. Okay, so in various things you have to decide on the pricing strategies. Now, many times in other industries, it depends on the seasons. Okay, when the product is seasonal, during the season they'll rise the prices because it is only that season where the things will be sold. Now, currently a rainy season means the market for your umbrellas and rainy wears, etc., increases. So they'll come with the pricing strategy during this time. So how the new goods are coming into the market, those all things when you study, you can design your own pricing strategy. And the last step will be after doing all this, you will set the prices. Okay, you will set the prices. So there are 6 steps: establishing pricing objectives, determine the cost, estimate the demand, study competition, decide on pricing strategies, and then you'll set the prices. Now, beyond this, there is a concept of monopoly. So, monopoly in the market is the thing where only you are the service provider. Okay, you are the service provider in the market. Then you have your own methods of designing the prices. For example, when initially the cell phones were introduced in the market, Nokia was a brand. Okay, Nokia cell phones were the brand, and there was no much competition for those Nokia cell phones. So at that time, the pricing was in their hands. They could, charge even say 1,000 rupees more for a piece, but there was no one to question them because they had a monopoly, and there was no other competitor with whom the rates and the quality can be compared. So there is something called as monopoly. So if you come up with a monopoly in the market, then pricing is completely in your hands and you can rule over the market. Now, when we see Indian market, beyond your civil engineering also, there are various markets wherein we have a monopoly. Still, noodles is Maggie for us and still biscuit is Parle-G for us. Why that name comes up? Because it has monopoly. So even in a cement industry, still there are 2-3 players. We have hundreds of brands of cement, which may be better also. But companies such as Ultratech, ACC, Birla Shakti, they have a market monopoly in particular regions. So whenever customer goes to get that cement, he will ask for that particular brand only. Say when we go to purchase steel, first we prefer the Tata Steel. Then we have something called as JSW is there. Other things have come up. So that is what is monopoly. So if you go into monopoly, what happens is pricing will be in your hands. Now there are reputed builders in a particular city or big firms. When they launch their projects, people will run and book first. They will not bother much about this pricing in that case. Every city has such prominent builders and developers whose projects, when they are going to be launched, people will automatically go and book. They need not advertise much also because they are a brand, and they will not compare their prices because the that particular company or that particular builder is so reputed that he will not compromise on his prices because he knows he has offered a lot of service, and even if his prices are high, people will be preferring his projects. So those are the second sides of pricing. If you go and work with the company which is having a monopoly, then those all things will be considered. So this is how, in 6 steps, we go ahead with determining the pricing. First is establishing pricing objectives, how your pricing should be, with what objective you are coming into the market. Is profit is the basic objective, agreed, but are there any other objectives? Then determining the costs which are involved, estimating the demand, studying the competition, deciding on a pricing strategy, and then setting the prices. So these are the 6 steps for which you have to write the answer with the explanation. I have discussed the steps. Okay, it will be assignment question also. Further, it will be asked in the intervals also for 10 to 12 marks. So the explanation for this with proper suitable examples you can give. Then, which are the factors which will influence pricing? 4 key market factors that must be considered when reviewing and establishing prices: cost and expenses, supply and demand, consumer perception, and competition. Again, some points match with the previous. So these are the factors which will influence price. Now your costs are set already, or you have fixed up your price, but then you realize that the expenses are going higher because one of the raw materials which is required by your production unit, the cost of that raw material has increased. So say if you are in a cement production industry, you will suddenly find that a particular product or particular raw material which you are using in manufacture of cement, there are various raw materials which we are using, particularly one material, the cost has escalated. Or say the electricity supply charges, now from this month in the state of Karnataka, already per unit 30 paisa, they will be charging more. Now for a residential buildings or flats, homes, it will not be of that great importance. But when you talk of big industry, that rise in the cost will affect their production. So these are the factors which will you will have to worry if they change once you have established the prices. Factors influencing prices. Then you have supply and demand. Suddenly supply, one more player comes in the market, he also starts supplying, so automatically demand will be satisfied and your product is at a higher cost. Then what you'll have to do, you'll have to do some branding, name change, and get a product at a lower costs. This all especially happens in the electronic industry when when I say a cell phone is launched with various new features and it is priced at a high cost. Another competitor company suddenly launches one more cell phone model which is having exactly the same features, but it is costing 3 4 thousand less. So this becomes an important thing. And suddenly sometimes what happens, your product is in demand and supply is not there. There is no one supplying, so still you can increase the rates. Now currently during the corona times, many times medicines, everything, okay, say from oxygen, the supply demand govern the prices. Then consumer perceptions. Now this is a very important concept. You need to understand the market properly. Say when you are in a tier 2 city like Belgaum, Bijapur, Bagalkot, Hubli, Dharwad, okay, here the consumers perception about pricing is different. Many times they say that this price is high, price is low. Okay, they are not giving more emphasis on service. Many times this is not common everywhere, but I'm telling, they are giving more emphasis on the costing. Whereas when you go to metro, as the rates are escalated to a very high level, their people are not much bothered. Secondly, their incomes are also more. They are not much bothered. They want the service to be done very quickly. Okay, now a simple plumbing fitting has to be done. They have an agency wherein they'll book an appointment, a plumber will come, his visiting charges will be 500 rupees plus the material charges. He will give the bill and bills will be paid. But if the same thing happens in the tier 2 city, we will think 10 times which tap he is using, which shop he'll get, or we'll think of the option that we will get the materials and keep and let him come and only do the repair works. Okay, so that is what is consumer perception. So consumer perceptions plays a very important role when you are into marketing and selling of your goods. You should be able to understand your consumer or your client, his requirements, and in what mentality he is, in what way he will be thinking. So we many times say no, he's charging too much, okay, and he's charging too less. For us, bargaining is very easy when we are with the street vendors. But if you say a burger or a pizza is costing 500 rupees in Domino's or Pizza Hut, we don't go for bargaining there because that is perception. Because that is a brand name, and their brands will, if they charge us 100 rupees extra also, we all remember the famous example of eating a samosa for 100 rupees when we go to watch a movie. And that same samosa, if we are paying 25 rupees, we feel heavy when we are outside. So that is what is consumer perceptions. So nowadays in civil industry with various products coming in, this consumer perception has become a very important concept. Then last is competition. Yes, everywhere where you go, there will be competition. Now, you all also can fit yourself in the supply, demand, and pricing. Now you are expecting a salary of say 40,000. That is your pricing. Now, how will you get that? Okay, these all will be the factors. Okay, also have to think you have put up 2 years as a PG student after your BE. So I cannot work for 10,000. I cannot work for 8,000. I cannot work for 6,000. Okay, I have to get minimum 25,000. Then how is my competition? What are the things which I have which will get me an opportunity? That is perceptions. Okay, so this is a generalized principle which will be applied for various things going in and around. So this is what are the factors which will influence pricing. Now, basic pricing concepts. Cost oriented pricing will be there. Demand oriented pricing, competition oriented pricing, other pricing methods. So cost oriented pricing is the one wherein you are much bothered about the costs of your inputs. Demand oriented pricing is depending on the demands. Demand is more, supply is restricted, increase the prices. Demand is less, supply is more, reduce the prices. Competition oriented prices. Sometimes to stay in the market, okay, you'll have to reduce your price. You may be operating on no profit, no loss basis also sometimes. Now, if we take the internet as example, Jio, when it entered the internet market, okay, it was only targeting to kill its competition. Many big companies such as Idea, Vodafone had to merge together because they could not sustain in the market. Only the company which sustained was Airtel, which sustained because it had a good consumer base in India. Okay, so this is what is competition oriented pricing. Okay, many times when big companies come into the game, what they try to do is they lower their prices so that they want to kill the competition. And once the competition is killed, they establish their monopoly, and then they can do anything what they want. Now, for example, when you say your social media, okay, many of you all are very active on social media. Okay, which is that company which is having the maximum base in social media? You all are daily in social media, so I'm asking you this thing. Which is the company which has maximum things in social media? It is Facebook, because your Insta, your this WhatsApp, everything is done under them. Tomorrow, if they say that we are charging 100 rupees per month for using, now you don't have parallel options, or even if parallel options are there, we are not used to use them. Okay, we instead of asking, what's your qualification, people today want an Insta profile. That's what's happening. So that is competition oriented. So once if monopoly is established, what can happen is competition oriented pricing can be thrown out and you will be the boss of the markets. So these are the basic pricing concepts on which you can fix the price. Going further, okay, these are the sub things in it which we don't want to go in detail for our syllabus. But if the question comes, which are the different policies of pricing or methods of pricing, under these four heads, you can list this. markup pricing, absorption pricing, break-even pricing. Now, break-even pricing is the thing wherein we are just happy with no profit, no loss. If you are doing some social projects, okay, you are constructing, say, a water tank in a school. So that time you don't expect some profits because you are doing something good for the society. In a government school, if you are sponsoring a water tank, so don't establish that becomes a break-even pricing. Okay, so these are the various pricings wherein various things will be involved. And when we go on competition-based pricing, the fourth one, tender pricing, becomes a very important aspect for us. So other methods are differentiated pricing. Differentiated pricing means for particular clients or customer, your prices are different. For other clients or customers, your prices are different. Affordability pricing means you're coming into a product which should be afforded by everyone. So depending on the society for which you are designing, you'll come up with a price. For example, if you see the products of Tata, maximum products are under this affordability pricing because the main aim of the Tata Group is to see that the most common person in the society is able to afford the basic things. So this is how your pricing and pricing policies will matter. So in today's class, we have discussed about what is pricing, which are the different steps involved in pricing, what are the factors which will affect pricing, and the various policies by which we can fix the pricings. So hopefully you will apply yourself and come up with different good examples when you write the answers. So all of you can put up your USN for attendance and you can log out. Thank you.